Coming up today, stocks continue to rally on the back of lower inflation, the changing tune of Wall Street, Coinbase rips higher, UnitedHealth gets slammed, massive new chip deal for Nvidia, and all the other important headlines, data, and charts to get you updated today. You don't want to miss this one, guys. Let's go. Well, this technical strength in the stock market is undeniable here. Once again, a risk-on growth rally led by some of the biggest stocks. Mega cap tech having a great day. Tesla up 5% and the chips showing up as well. Nvidia up over 5%. I'll let you know the important news we got out today moving that stock, along with why UnitedHealth got absolutely slammed. The traditional blue chip from the Dow Jones Industrial Index coming off a huge 18% today as healthcare is still on the toilet here, along with continued move out of defensive stocks. And we've got some other key stocks breaking out actually to brand new all-time highs today. Stick with me and I'll share all the most important charts as I've got a good one here for you today. But just starting off with some market analysis. Stocks are continuing to rally on the back of this new US-China deal announced on Sunday. Also helped today by softer than expected inflation, which I'll get into later on. We now got the S&P having wiped out all its losses for the year. Now just getting back into positive territory. And just after we'd been persistently in extreme fear for almost 2 months, we're now getting persistent technical strength to many people's surprise. But are we getting a little stretched here in the short term? I can see my S&P 500 oscillator, which looks at a range of indicators, market internals, combines it together into one composite score here, has just moved back into technical overbought territory, sitting just above 62. And looking back in history, the last couple of times we got there did mark short-term tops in the S&P 500, only for a week back in early November, then a bit more significant back in December, and then it's going back prior to that, mid-July, it marked the top, and before that, a little one there, and the 10th of May turned out to be a continuation, and more importantly, and what we'll be looking for this time is if we get this pattern here, persistent, short-term technical overbought condition. That's really a bullish pattern right there. You see the market absolutely coiling up with realized volatility, just contracting, and we don't get any big dips. In other words, the algos are buying every and all dips there. The market catches on, and we kind of just grind higher. That's a really strong technical pattern for the medium term, and then it turned out to play out quite well in late 23 going into 24. So here we are today, and if we go into that same persistent short-term technical overbought pattern here, I'd say it's pretty much inevitable that we're going to break out to all-time highs. Even if we get a bit of a pause there around 6,100, which is typically what markets can do when approaching highs. But wouldn't this just blow the socks off so many people after coming off record bearish pessimism just a few weeks ago, and it's still quite elevated? And I mean, we were just at the same level of pessimism, bearishness, and forward expectations as the global financial crisis back in 2008. Now we're within a stone's throw away from all-time highs, which I think if we get in the next couple of weeks, all those sidelined bears will be forced to jump in as the FOMO, fear of missing out, will be too great. And then we can probably have a pullback in the market as those trying to time entire markets will inevitably get whipsawed again. And so many people in the market and the financial media at large are still dumbfounded by this surprising news we got over the weekend. Looking at a piece in the journal here today, Trump's China deal makes sense. How he got here doesn't. Who really cares how he got here? It doesn't matter. The fact is we may have already seen the worst of it when it comes to the US-China trade war. Of course, there's still risks, but we've just seen a massive de-escalation. And I mean, it was only 5 days ago Goldman Sachs and the rest of the street were lowering their S&P 500 forecasts, increasing their chances of a recession, saying prepare for a further drop. But now 5 days later, they're back to chasing the market in classic Wall Street fashion, raising their S&P 500 forecast, lowering their odds of a recession, and we're seeing the same thing today with JP Morgan, dropping their US recession call. Not to mention global fund managers doing the same thing, coming off that peak of what percentage of them say a global recession is likely. And we saw those peaks previously in the depths of prior bear markets. I think a lot of people overestimate how good the so-called smart money, institutional investors, fund managers, hedge funds really are. And I've got experience from working in an investment bank and seen it. I think a lot will be surprised. The big focus of them is just gathering assets, collecting management fees. They're like elephants. They can take days and weeks to get in and out of stock. Huge amount of slippage. That's why you'll find pretty much the entire industry delivers on average returns that equal the market minus their management fees. Pretty much just beta minus management fee. But of course, a lot of retail traders get bedazzled by the so-called smart money and other niche concepts like dark pool. Does anyone make any money following that stuff? Just looking at large block trade made by institutionals, pension funds, and insurance companies. You don't know whether it's a buy or a sell. And trust me, hedge funds that know something, they operate in a much more stealth way, using accumulation and distribution algos. Sitting on the bid and offer thousands of little orders. They don't advertise their positions to the market that anyone can see. They're typically just institution pension funds that just need to get in and out, and they pay a premium to the street to organize those block trades. And yeah, you will see a few more of them at turning points, just like you see more volume in general at all turning points in the market. It also coincides with block trades. So that entry level dark pool data is not making anybody any money. And now the media and streets claiming this is an extremely rare comeback. Really? When the VIX spiked to 60, it's rare to see a recovery after that. And once again, it was retail buying the dip and getting mocked the whole time. And so is the media and everyone else who likes to mock retail traders, maybe underestimating the collective power of modern day retail traders who have been on the rise for the last several years. Has financial data been democratized, so the playing field with the so-called smart money is more level these days? Remember, us as retail traders can get in and out quickly in the market. Big funds can't do that. Is having a sense of permanent optimism, like many retail traders do, really the best approach to trading and investing in stocks? Are retail traders backing the new US admin more so than institutional investors? All of these questions could be playing out in the market right here because the technicals don't lie. We've seen some really good breadth thrusts these last couple of weeks, as I've been noting here on the channel. We've now got more than 58% of stocks hitting a 20-day high. Looking back in history, really good forward returns on that. Positive 100% of the time 9 months later and 12 months later as well. And that's given us both a degraph and swag breadth thrust. And when those two occur within 1 month of each other, super bullish forward returns. Look at that, 26% 1 year later on average. The bears out there are essentially shorting these signals. And so once again, the market found high highs and higher lows today. Just looking at the chart of SPY here, now sitting above the 200-day moving average here in the grey line. And as it stands now, even though this has surprised a lot of us, I said a few weeks ago I'd be surprised to see all-time highs anytime soon, but that doesn't mean I wasn't positioned for this. As I told you guys over the last month and down here, I had been buying the dip and adding to my favorite positions. I was just being a lot more cautiously optimistic and remaining delta neutral in my options portfolio. But we must adapt to the data. Technicals lead, the fundamentals follow. And so right now, it's not really looking like a bear market rally because we just took out that prior swing high. And that's technically key because we're making a higher high here. And that could be the first high low off that bottom from the 7th of April. We've also got multiple sectors showing strength. Some leading stocks that I'm about to show you about are back at all-time highs. Volatility falling off a cliff. Risk assets flying. Really good earnings results. And now all these breadth thrusts. I mean, that's all pretty technically bullish stuff that we can't ignore here. And I think the bond market is pricing that in as well. Bit of a bump up in bond yields that stocks haven't seemed to mind, potentially signaling the US economy is going to be A-OK. There were no material red flags in US inflation data today. Of course, risks remain. It's still early days. With the data that we're getting from tariffs, there's going to be a bit of a lag there. Nonetheless, was good to see it come in below expectations, 0.2% month over month versus 0.3% expected, and the price action in credit markets as well. Looking constructive here, along with a big pullback, which actually started early. This was the first sign things were going to be okay. Was the pullback in high yield spreads. And what I call the new Mag 7, a list of 7 stocks I gave you guys a couple of weeks ago. As I was already seeing on the chart back then, they're acting a lot better than the traditional Mag 7. They're absolutely on fire today. Netflix still just below all-time highs. We've got Uber, which as you guys know, I've been bullish on all year, just having breaking out to brand new all-time highs today on really good volume after coming through with a really good earnings, beating expectations by 63% last week. And this continues to be one of my best performing investments this year. We've also got Palantir, which I admittedly sold out of too early. Nonetheless, I still made 180% on it. It too breaking out to brand new all-time highs today. And Robinhood, close to doing the same thing. As I told you guys early last week, it was shaping up on a good consolidation, and we look to have uncoiled here on the upside. Really good participation. And of course, Coinbase, quickly catching up today, up almost 24% on news. They will be included in the S&P 500. And so as a group, this new Mag 7 continues to outperform the traditional Mag 7. And we just got some great news today for Nvidia. Market cap getting back above 3 trillion after we're getting some really good developments coming out of the White House's visit to Saudi Arabia. After they just announced a strategic partnership with Humane, an AI firm that's a subsidiary of the Saudi's Public Investment Fund, one of the biggest sovereign funds in the world. Nvidia will provide Humane with its most advanced chips to power AI factories throughout the kingdom. First phase of the 500 megawatt build out will deploy 18,000 GB300 Grace Blackwell chips. That follows on the heels of a separate partnership announced on Tuesday between the States and the Saudi, with them set to invest $600 billion in America's AI and energy infrastructure. Like I said, this new admin's running the country like a business, trying to attract investment, reduce costs, and increase revenue. And we are seeing the results of that, which is why I think what I call the American comeback trade is really ripe, coming off these still oversold levels of the relative performance of American stocks versus the rest of the world. And that spread too, just closing above the 50-day VWAP for the second time. And that's the first time we've seen that since the start of the year, 2 consecutive days above the 50-day VWAP here. And obviously the market's loving this news for Nvidia. It's just been de-risked from the latest China deal, and now it just reclaimed the 200-day moving average today on the back of this new Saudi deal. Now all of a sudden, Nvidia trading in the 90s a bit over a month ago looks cheap, and hence why I took advantage of that, just like I told you guys back then. Also starting to look cheap a bit over a month ago was a Tim Waltz bottom when he came out bagging the stock and said he enjoyed seeing it trading at 220 a share, which happened to be the exact same level I recently added to my long-term position in it. And as Tesla can often do, it just rips up off the bottom in no time, already up 52%. As we're just on the cusp of robo-taxis and the Optimus bot humanoids next year, markets shrugged off this really weak earnings, which again, is just surprising how resilient this market is. And Tesla, I think a lot of people underestimate how much of a key player they're going to be in AI and robotics. And I mean, just look at this technical recovery in chips. That's remarkable. And the White House's most recent visit to the Saudis is unlocking hundreds of billions of dollars in new revenue. It's not only Nvidia, but also Google, Salesforce, Oracle are partnering with the Saudis on AI. We even saw Palantir CEO Alex Karp there. Elon Musk was there. Jensen Huang, Lisa Su from AMD, and a bunch of others. They're all meeting with the Saudi leaders and shaking hands. That's good stuff. Also looking good, and what I've recently invested in and added to is my investment in the ER shares private public crossover ETF that I first shared with you guys back in the middle of March. I've been recently adding to this position as I'm looking to make this a permanent and core holding in my long-term portfolio, as its biggest position is private shares in SpaceX, not to mention 30 other of the most high-quality businesses in the world, in my opinion. I've had a number of you guys reach out to me to thank me personally for this. And so that's what I like to think that I do different from others you may follow. I share with you guys exactly what I'm investing in and trading in. I'm not just trying to entertain you. I'm also trying to really help you and create value in your life and add to your financial journey and education. Another one of my investments, perking up a bit here today, Rich Tech Robotics. It's actually held up a lot better than the rest of the market these last couple of months, having consolidated. We've got other robotic stocks shaping up. The nuclear trade swinging back into action. NuScale, another one coming out with a good earnings result and the market loving it. It was only just 2 weeks ago the market was punishing earnings results, even if they were good. But we've seen a big and swift change in the technical. Also looking good on the chart here, Oklo, it too, with good earnings, breaking out, and some monster moves and clean energy stocks. Solar, look at First Solar there today, getting upgraded by the street. And one stock you really want to keep an eye on, Grail, working on early cancer detection, using AI, it too, coming in with better than expected earnings and the market rewarding them up 20% on volume. And so all my long-only portfolios are quickly bouncing back to life this last week, proving it was a good time to buy the dip a month ago. But man, I love trading options as well. I think it's the best game in the world. And it truly makes trading three-dimensional. If you think about it, trading stocks is one-dimensional. Price either goes up or down, and you determine how long to hold the trade, whether that's 20 seconds or 20 years. Whereas with options, it adds another 2 dimensions to just trading price, and that is trading volatility and time. Hence it's 3D, allowing you to set up really unique trade structures and take advantage of specific opportunities in the market. And I find that to be really intellectually stimulating and also very rewarding. And so if you're interested in trading options with me in my private chat room and getting access to all of my custom tools, then there's still available spots to join my Market Makers Kit program. Just click the link below this video, head on over to clickcapital.io and use coupon code SELLVOL to save 50% today before it expires. I shared a few more trades I took today in the chat room, and I've been getting lots of great feedback from members already. And just wrapping up with a few more interesting charts and data for you guys here. Got a real cool one today from Fidelity, a history of drawdown. We've got the monthly lows here on the x-axis and the 12-month high on the y-axis. Monthly data since 1871. You can see how the market oscillates from being in a secular bear to a secular bull. And I mean, when you really step back, these drawdowns are just a blip on the radar. And like I always say, represent buying opportunities if you have the cash flow to do so. Because long-term, stocks are up and to the right. They've seen every type of threat and risk you can imagine. And at the end of the day, companies keep making money. Productivity, innovation, and technology continues to advance along with the population, along with the inflation and the supply of currency for which stocks are priced in. And those quality companies that have defendable moats, the pricing power, they'll continue to perform better than cash in the long term. Because if you're long cash, you're short inflation, and that's proven to be very detrimental to your purchasing power over time. Also adding to my thesis for the American comeback trade, it's not only the extreme positioning we've seen in international stocks versus American stocks, but also in the dollar, with the futures market being net short. Looking back in prior times, when we've seen that, the forward returns for the dollar have been quite positive. And so this too could be shaping up for a continued recovery and potentially bounce back above its 200-day moving average as well. And look at Bitcoin, also shaping up just below all-time highs. Good proxy for global liquidity, which has been on the rise. We've seen that with M2. Wouldn't be surprised to see Bitcoin break out to new all-time highs any day now. or potentially next week. And like we've been discussing the last couple of weeks, the gold trade had gotten pretty crowded, both small and large investors. In fact, more than the Mag 7, but gold hasn't really cracked even its 50-day VWAP just yet. It has been on quite the remarkable run this year. I think it could be due for a period of consolidation. Now we've got the trade war risks getting dialed down, and inflation did just come in low, and that spread I was talking about a couple of weeks ago on the 22nd of April when it first showed up on my radar. Long Bitcoin, short gold continues to perform well again here today. And like we've been seeing in Trueflation data, inflation in the economy has been coming down. Of course, expectations have been going the other way, but CPI did just print the lowest number we've seen in a year. And just going out to a 5-year chart here, I think it's fair to argue inflation is still downtrending. But don't expect any favors coming from Jay Powell soon. President taking another swipe at him, as Jay was happy to cut rates last year with inflation above 3%, the stock market at all-time highs. But now, not so much. With the president coming out with the new label, Too Late Powell. And I agree, if you really want to get behind America's industrial rejuvenation and a global trade reset, it would help to loosen rates up a bit. I mean, Powell does have 425 basis points to work with. And his big talking point this last month or so is that he wants to stay on hold because he's worried tariffs are going to increase inflation. All of a sudden, he's becoming proactive instead of being reactive like he's normally always been. But we're already seeing trade deals. These extreme level of tariffs were never going to stick to begin with. It's all one big negotiation. So watching CPI prints over the next few months will be interesting. And just moving on today, UnitedHealth, the drama continues. Suspends their outlook and the CEO steps down just after cutting their guidance a few weeks back. They've been having issues ever since one of their subsidiary CEOs got cut down on the streets in New York, shining a light on their data, in which we learnt almost a third of all their health insurance claims are denied, a stat that blows me away. I base myself outside the States, and my health insurance company denies less than 5% of all claims. I can't imagine paying insurance for years and years. You get a big medical bill, and they find some technicality to weasel out of it. You can see how that would drive people crazy. Of course, no one deserves to get gunned down because of it, but shareholders are certainly picking up the tab. Stock's been cut in half since late last year, and that is a pretty big move for what was a $600 billion company. But like I said back then, I wouldn't touch it with a 10-foot pole, as the fundamentals were so bad, as the market and the customers were just waking up to how much they had been getting away with. And now with this new admin coming after them even further, something prior leaders haven't been able to do because they've been corporate sponsored. And so that's one benefit of having a billionaire leader. He's already rich, doesn't need to sell out his country to become rich. Nor does he need to have a web of dozens of shell companies to accept foreign payment. But anyway, that's another story. We've moved on from that now, and just generally speaking, these large healthcare stocks are just not appealing to me here, as US consumers have been paying, on average, 3 times the price that the rest of us around the world do for the same pharmaceuticals that are actually produced by American companies. There's been a massive abuse of power that finally looks to be getting corrected for the benefit of consumers at the expense of shareholders. And finally, just looking at crude oil, it too perking up here, getting a little bit of an everything rally, reclaiming its 50-day VWAP. Started last Monday, super low. And I was there watching futures when they opened on Sunday night. And why I took a bullish position in it, trade worked out straight away. And another favorite sector of mine, uranium, also reclaiming its 200-day MA. Really constructive signs we've got going on here across many markets. Russell 2000 still has to reclaim its 200-day MA. Got a bit of catching up there to do, which I think is definitely possible. But just looking at the Mag 7 today, really constructive stuff. And I mean, this monster vol crush is just undeniable. Look at that, sitting just above 18 on the VIX here. I still think around 16 is cheap in this current environment, whilst the SP's under all-time highs. But if we take out all-time highs, no reason we can't grind down towards 12 again. But that's still yet to be seen. Like I said, I'll really be paying attention to the price action here in the S&P 500. Now that we've gone technically overbought in the short term, we're getting these positive news on AI, new deals with the Saudis, de-escalation with China, big breadth thrusts, leading stocks breaking out to all-time highs. That's bullish stuff. And that's pretty much a wrap for the daily market review today. Thanks very much for tuning in. I'm interested to hear your thoughts in the comments below this video. And like I said, if you want to jump on board with me with the Market Makers Kit and get access to the private chat room, click the link below this video and take advantage of this special offer whilst it's still available. That's all for now. I'll see you again this time tomorrow. Cheers.